Hi guys, welcome back to my channel. Kelvin here. So the other day, after Netflix announced their earnings, their stock dropped by almost 40%, which is super painful. Then you'll be like, wow, 40% discount. Is Netflix a good stock to buy now? So in this video, I want to explain why Netflix stock dropped by so much and whether you should buy Netflix now or should you stay far away. But before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a gorilla dancing. Alright, let's start right now. Okay, let's take a look at the earnings first. Netflix beat earnings per share expectation. While analysts were expecting $2.89, Netflix earnings per share came out to be $3.53, which is obviously a good thing. However, that's the only good news they have. Because while analysts were expecting $7.93 billion revenue, Netflix missed it slightly at $7.87 billion revenue. But this is just a small reason. The biggest reason for the stock crashing is that Netflix is losing subscribers. In January, Netflix estimated that they would add 2.5 million new subscribers, while analysts were expecting a 2.73 million new subscribers. That didn't happen. Because not only Netflix missed subscribers' expectations, they missed it by a lot. Instead of gaining subscribers, they lost 200,000 subscribers. And this is big news, because for the first time in a decade, they lost subscribers. Previously, their subscriber count is only going up and up, like the price of my Chai fan. Now, they say that it was partly due to them pulling out of Russia, because I know, some dude decided to go and disturb another country. This caused them to lose 700,000 subscribers from Russia. Remember, in Russia, you don't unsubscribe to Netflix. Netflix unsubscribe from you. Okay, even if we ignore Russia's impact, they will have only gained 500,000 new subscribers, which is still super duper far from the original 2.5 million subscriber estimates. So why is Netflix losing subscribers now? Here are a few reasons. First, more competition. When Netflix first launched their streaming services in 2007, they disrupted many traditional businesses, like Blockbuster, the movie rental business, or no more already, or the Pasar Malam pirated movie seller, or close shop liao. And since then, Netflix did really well. Revenue going up every year, subscriber count increasing every year. In 2018, even our Catty Mama predicted that Netflix could reach 400 million subscribers by 2023. But in reality, Netflix subscribers have just barely passed 220 million and have started to decline. 400 million subscribers? Can is can, but you wait long because in the past few years, there were more and more streaming services like Disney+, Apple TV+, Hulu, HBO Max to name a few. At the start, Netflix wasn't worried about competition, saying that they have been preparing for this new wave of competition for a long time and that competitions were just modest headwind. But guess what? This modest headwind is not so modest after all. In 2019, Netflix had about 71% market share, but slowly the competitors be like nom, eat up Netflix market share. By Q4 2021, Netflix market share had already dropped to just 25%. Here's something interesting. Since Netflix first launched till now, it had gained over 220 million subscribers. In comparison, since Disney Plus first launched in 2019 till now, it has already gained 130 million subscribers in 3 years. So it does seem more and more likely that competitions will eventually overtake Netflix. But why is this happening? And that brings me to my next point. Netflix content. To prepare themselves for competition, Netflix has been investing heavily in original content. In 2020, they are spending 38% of their budget to produce original content, while the rest are used for acquisitions. By 2025, they will be spending a bigger percentage on producing original content. But here are a few problems. Right now, a big part of the content is not originals. Users can easily watch some of the same stuff elsewhere on another streaming platform. For example, if you like watching giants eating humans in Attack on Titan, you can easily watch it in Disney+, Hulu, Crunchyroll. So for this part, Netflix has no modes at all. Netflix mode is in original content. But the problem is, not all of the originals are doing well. Like recently, their biggest hits were Squid Game, but other than that, there's nothing much going on. On top of that, some of the originals don't even have the chance to do well before Netflix decides to cancel them. And of course, many people were not happy about it. In comparison, if you look at Disney They are already a productions company, producing films way back in 1930s, even before your Sergeant Ama was born. And over the years, Disney has been collecting movie studios like how Thanos was collecting Infinity Stones. Disney owns Pixar, the 3D animation company, Marvel Studios, which has the MCU, Lucasfilm, which owns the Star Wars universe, 20th Century Studios, which produce a lot of popular movies, National Geographic. When you combine all of these studios, with each producing their own content and releasing onto Disney Plus, it's easy to see why Disney Plus is growing super duper fast while Netflix is losing market share. Third reason, market saturation. While it's true that Netflix has been consistently growing in the past, its growth has actually been slowing down. Check this out, the subscriber growth was tremendous, but right after 2020, the growth has started to slow down, and that's because of market saturation. Take for example, from 2018 to 2019, they grew their subscriber base by 20%, but of course, they can't keep growing that fast anymore. Add to the fact that there's more competition now, Netflix will be having a harder time from now on. This just means one thing, Netflix is no longer a growth company. If you look at the past PE ratios, it was like 200, 100, because investors be like, value investing instead, I want growth stocks and what big. But with growth slowing down, Netflix is slowly becoming a value company. That's why the stock had dropped from $700 all the way to $220, and PE ratio dropping to only 20 now. To counter this slowdown, Netflix has been trying out all kinds of methods to earn money. First, they tried raising the price every now and then, going from $12 in 2013, then $14, $16, $18 to $20 now. Even egg prices didn't increase that fast. Netflix is also planning to charge viewers who share passwords, because they found that there are 100 million global households who share passwords. So might as well make them pay, right? But wait, that's not all. They also plan to attract new subscribers by offering cheaper plans with ads, which is funny because previously they have always been against advertising. So those are a few reasons why Netflix growth is slowing down. Okay, here are my thoughts. While Netflix is trying to squeeze more money from subscribers here and there, those are just short-term solutions, because other platforms like Disney Plus are cheaper and have better content than Netflix. If Netflix just sit there and continue doing their usual thing, they will eventually lose all their market share and close shop. This is something that happens to all the companies. If you grow big enough and stop innovating, then other companies will come and steal your business. But of course, Netflix won't close shop overnight. Right now, Netflix is still the market leader, and it will probably take 5 to 15 years of doing nothing before they close shop. So what they need to do is start innovating. A while ago, Netflix announced that you could play games on their platform. Personally, I was hoping that it would be a video games streaming service. But unfortunately, those are just normal games like the Apple Arcade, where you can play any games you want. If they really want to innovate, they will need to think about streaming video games like Stadia and Luna. Besides that, Netflix could also allow smaller quality productions to list on the platforms, like the stuff that you usually see on YouTube. For example, Kuzazak or Johnny Harris videos. But whether all this will happen or not, we will just have to wait and see. Personally, right now, I'm uncertain how Netflix plans to come ahead. Even though the stock is cheap now, the company's future is not clear. Cheap stock can be cheaper, and because of this, I feel that Netflix is not a good investment currently. If you want to invest in streaming platforms, a better company will definitely be Disney. Their businesses are much more diversified. They have their theme parks, intellectual properties, and their streaming service is growing fast and furious. Anyway, that was my thought on the Netflix stock. But what do you think? Is Netflix a good company to invest in? Comment down below and let me know. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.